This is the playbook for Bitcoin companies to let the market know what your intention is and let the market see you carry it out. Tell the market you're going to buy Bitcoin, then buy the Bitcoin, then tell the market you're going to borrow more money to buy Bitcoin, then borrow the money, then buy the Bitcoin, and tell the market you're going to buy more Bitcoin with more borrowed money. That is the playbook.
We talked about David Bailey, is the CEO of Bitcoin Magazine and co-founder of BTC Inc. He plans to smash buy $760 million worth of Bitcoin, a bit less than the $1 billion he initially teased, but hey, the buy will be happening using a VWAP, which is a volume-weighted average price strategy to avoid spiking the market all at once. Bailey, who also runs Nakamoto Holdings and has advised Trump on crypto policy, has sparked a mix of admiration and skepticism across the crypto space. And now we're going to bring back Cedric to talk about it. Cedric, you, my friend, have been in the space for some time. What was your first reaction to David Bailey's plan to drop $760 million into Bitcoin in one day?
Well, I was excited for him. It seems like there's a dream come true for him to smash by this amount of Bitcoin at once, even though technically he is using the VWAP, so it's not all at once with one push of a button. But, you know, it makes, from the traditional financial perspective, you'd ask, why would you telegraph the buy? But the Bitcoin treasury company's perspective is all about transparency and communication and sort of letting the market know your intention. So it really fits the bill for what Bitcoin treasury companies and the strategy they've been rolling out in the playbook. So I really get it from that perspective. But it gives your enemies in the market sort of a tip. It lets them know what you're planning on doing. And, maybe there would be defensive reasons not to do that. So it's going to be interesting to see how this plays out. Bitcoin's kind of flat since it happened, which, we'll see how it goes. And a lot of micro strategy, huge purchases or strategy, MSTR, have not really resulted in sort of one day or weekly moves up necessarily. And maybe that speaks to, short sellers and the anticipatory relevance of market makers knowing what you're going to do. So but it's very exciting news. I wish it was a little more than 750 so we could have honestly said he bought $1 billion in a day. That'd be fascinating. So happy for David Bailey. Seems like a dream come true.
Yeah. I mean, yeah, absolutely. And you mentioned that there's usually this element of transparency, and especially in this space, that's something we all love and is encouraged, and that's kind of part of the whole reasoning behind it, right? You can always know what's going on. You could follow the money through the addresses. But do you think that in this case it was a smart move, or does it just encourage others to trade ahead of him? Or are we going to kind of have to wait and see how this plays out to really know?
Yeah, so I think, in my background and my mindset is it seems a little immature to boast about your buys, let the market know what you're doing in advance, let your actions speak for themselves after the fact, I think would normally be better. That is how these treasury companies get alpha compared to an ETF. And it's how they sort of refine Bitcoin for traditional capital markets, which is what strategy is doing. They're buying tons of Bitcoin and then offering the market different products that they would be interested in for their tolerance of risk and time frame. And that's sort of the refinement process that's emerging. And this could be the way companies act for the next 20 years. So it's very exciting to see. It remains to be seen whether it works out. And the security markets are different than Bitcoin. It's Bitcoin, we think about 4-year cycles. Well, security markets are a little bit more like 3-month cycles, and they have 4 cycles, 4 quarters in a year. And so maybe this isn't great for the security in the short term, letting the market know what you're going to do, letting all the other participants who are not Bitcoin supporters or excited about Bitcoin products sort of trade your stock lower. But long-term, acquiring the Bitcoin will probably prove to be extremely prescient and pioneering. So,
yeah, and we talking about the transparency. Why do you think in this particular realm, in this Bitcoin buying and this treasury company thing we're seeing happen in front of us, why is everybody so transparent about it? Is it because of the nature of Bitcoin and it's open source and you can see people trade, or is it maybe part of, there's always been a hype cycle around the crypto and the Bitcoin universe. So does it kind of feed into that a little bit?
So, yeah, I think it's more of an element of retail participation, of looking at the security like a meme stock, as an idea, as a. So the strategy is the idea, but you need to communicate the idea to get people excited for the strategy, because the crutch of the strategy from the equity side is to sell your security at a high MNAV, which means you need to have capital come in, rush in, and say, go get Bitcoin on our behalf. We're excited about the long-term implications of this at a multiple higher than the ETF. And the higher the multiple, the more advantageous it is for the company, the corporate equity entity, to buy the Bitcoin on behalf of the stakeholders, which includes the equity shareholders. So I think that the hype cycle is a really big part of this. I just released a show with Jesse Myers, and he spoke to this sort of shorter term cycle within the treasury companies and the equity markets. So it seems like there's more of a bull and a bear market, a boom and a bust on shorter time frames. And I think the marketing, the letting the community, there's communities-based sort of involvement here, and these companies seem to be competing for regulatory arbitrage in specific capital markets. So if you're competing in the UK or Canada or Japan, trying to replicate the strategy playbook in those capital markets, you sort of need to outcompete your competitors too, who are looking to run the same playbook in the same marketplace. So it's about getting the community support to come buy the stock, to tell more people to buy the stock so that they could trade at a higher multiple to acquire more Bitcoin, and continue to do so at a consistent rate. So whether that's weekly or monthly or quarterly, continue, not just buy. So Jesse Myers would, stipulate or hypothesize, you don't want to go out and smash buy it all at once. Actually, you might want to dribble it out to kind of keep showing growth. Right. So it's a really interesting paradigm. Sorry.
And just so I can get some clarity. No, you're good. You're good. So just for a clarification for our audience out there, if they were to do, let's say, do a smash buy, what would be the implications of that? Would it be they'd be buying it, the market would spike, and how does that work? Because if they spread it out, right, and there's these continued buys, would that in theory drive the price higher? So then they're buying back less Bitcoin using more money because they're driving the price up themselves and they continue to buy. Are you able to kind of expand on that and why they chose this VWAP strategy to avoid impacting the market too much?
Well, yeah, you don't want to spike the price on yourself, so and have slippage in the wrong direction for your own acquisition strategy. That would be one fear that you have. And so I think that you're looking to time your buys when volatility is lower, so you're adding to the volatility and not to the price, or to the volume of sales that are in the marketplace. So I think it's just another way of doing the TWAP. How much real slippage is it preventing? How much benefit are you actually accreting to the strategy, or is it really? You'd have to track that and then review that as well. So they would have I wonder how much they're looking at that internally, and we have no insight into that externally. But I would want to track that. And is it better for corporations to do the TWAP, the VWAP, or just smash buy at once? And why not do it over the counter? Through maybe a Galaxy. I mean, Galaxy was able to sort of offload what looked like 8 billion Bitcoin in an over-the-counter trade recently that we were all made aware of somehow. So why wouldn't they go that strategy either, or that route? So I don't know the pricing, maybe the fees on their side too. So and the different, the different market makers they're working with, and the different fee structures, and what they're also trying to examine and see what happens in the marketplace to test the market for future smash buys and bigger, capital allocation and investment. So they're could be so many reasons to run the program this way. To your point, though, I'd want to know honestly, is it really leading to a positive result for the shareholders? Is it is it leading to a better price acquisition? I'm not positive.
Yeah. I mean, we're kind of in some like unfounded new territory now, especially with these Bitcoin treasury companies. So I feel like people are still kind of figuring out what the game plans are. And that game plan very well might have to change based on the conditions at a given time, right? Wild and unprecedented times for sure. And it's certainly exciting as we're seeing these types of big events happen every day. And we're not really sure what way they're going to go. And I mean, this is these learning periods.
These are huge events, and they're you would think just on market sentiment, these events would drive price up. And they're not. It's almost acting like a bear market in a weird way. And it just seems like every dip gets gobbled up. And so that's also the Bitcoin ETFs, which are growing. We talked about this last time, at just a tremendous rate. So the Bitcoin ETFs, and these seem like the smartest of the index investors. They don't seem like swing traders. They don't seem like highly speculative investors. So I think, and you see a lot of institutions buying the ETFs.
Right.
So
I mean,
like Harvard just bought 100 million.
Right. Yeah. They just made that big purchase. I feel like we're in this new era of financial chess, and we're playing with a bunch of financial Magnus Carlsens right now. It's just like, I mean, Michael Saylor might be the Magnus Carlsen of the times right now, but it's just wild. And another thing I thought was super interesting about this buy was that Bailey is using his media company and treasury firm to buy Bitcoin. Do you think that's kind of a glimpse of what future corporate strategies might look like?
Well, it does seem apparent. I mean, every CEO is on X now, and it seems like their job is pure. It used to be the CEO was the visionary for the company who understood the product at a very in-depth level, and sales were sort of the veneer that we didn't talk about was the main part of the CEO's role. But now the CEO is either on TV or on X all the time, has to tell the story. And so I think it's much more indicative that the leading companies in Bitcoin have media arms to get their story out and take advantage of the network effect and virality of investing today. So So he has the conference company, he has the the media empire, and now the treasury company group, and they all feed each other. It's a huge flywheel effect. We already talked about how important it is for Bitcoin treasury companies to message and to build community and communicate with their community. Well, if you have a media arm, that's going to make it a lot easier to get the message out, the word out, and communicate with your stakeholders and get them excited about what you're offering. It seems like that's a really big part right now because of the MNAV multiple and how we look at these Bitcoin treasury companies. You have your small caps now, you have your mid caps, and your large cap, and that's really just strategy. And strategy is on the cusp of getting sort of institutional grade awareness for their products and services, which is just going to have an effect on all these other companies in all these other different markets. So what's also going to be interesting is how these different places like Japan, whether they change their tax code and their retirement code. I mean, President Trump just signed an executive order to allow, to kind of steer or encourage, Bitcoin and crypto in 401ks to make the road and the path easier for the average American to get Bitcoin into their 401k. This marketplace is maturing at just a rapid rate.
Yeah, and I think a lot of it has to do with, and it seems like this isn't something that's only in the Bitcoin crypto business, but like any company isn't just what their company is. You also have to be a media company to feed that flywheel you talk about, because the moves talking about the moves you make seems almost as important as making the moves themselves, right? It's kind of like if a tree falls in the forest, did anyone hear it? Someone better heard about it, because we need to talk about it, so otherwise the price action and that hype cycle doesn't continue. And I wonder do you think from a kind of a psychological perspective, specifically with regards to retail, do you think big moves like this make Bitcoin look more legitimate in like the eyes of John Q. Public, or does it start to kind of feel like a game for billionaires because there's so much institutional adoption? And I feel like retail's kind of been sitting on the sideline a little bit, feeling like we're priced out when we know you can buy any fraction of a Bitcoin you pretty much want. How do you think this is all having an effect on, again, John Q. Public and Jim and Bob and Mary and Sue out there?
I don't. I think it's having very little effect on John Q. Public. I think they're not. I think they feel burned by Bitcoin and crypto in general over the years with FTX and Celsius and Luna.